this video, we shall discuss the most important question faced by all of you out there. And what is that? Well, it's pretty simple enough. How to prepare for the Accountancy Viva. Is that not true? Children do not know what to do, how to declassify, how to declutter, all of it in very basic, simple terms so that you guys out there can easily understand. So let's start with it. Well, the very first step is, you at the back of all your books, do you not see a whole bunch of Viva questions out there? Well, just simply do one thing. Throw them into the dustbin. They mean nothing. Nobody does anything with them. No teacher asks questions from them. No teacher learns any questions from them to ask you any question from their end. Just throw the questions, Viva questions given at the back of the book, into the dustbin. That is the best thing you can do for yourself. So what you are supposed to do? In this video, I'll give a brief outline of what all is required, a small gist of what is all required. And in the forthcoming videos, part 2, 3, 4, 5 and 6, I'll discuss in depth about each and everything that you have to do with respect to book 3 or financial statement analysis in the accountancy project. Links for all the parts 2 to 6 are given down below in the description box. In this PPT, I will give you a general overview, just touching upon the basic headings that you need to cover for your preparation for the accountancy project. What is the need for financial statement analysis? Well, it could be manifold. To determine the earning capacity or profitability of a business, to determine the competitive position in relation to other firms, you need to know how your competition stands out. To determine the efficiency of management, how it carries on day-to-day operations, whether the operational management is efficient or inefficient, to determine the financial strength of a business, to determine the solvency of the firm. These are the basic premise, these are the basic conditions, these are the basic reasons for which financial statement analysis is carried out. Proceeding, you start your preparation work from the very first basic chapter that you need to do, and that is financial statements of a company. We have done a great in-depth video on that in part 6 of the video series. Please refer to that in the description box, like I said before. So you need to know what your financial statement is, what are your assets, your liabilities, the basic terminology given in the financial statements, and that those definitions will be definitely asked. What's the share capital? What is shareholders' funds? What is working capital? What are the components of the balance sheet? Any specific component can be asked in terms of a Viva. What are defined current assets, defined current liabilities, so on and so forth. You need to be well versed with every topic or every component of the financial statements. Then do ratio analysis. I have given a detailed description of how to prepare for ratio analysis in my videos 2, 3 and 4. Please find links below in the description box with the same. What do you need to do in ratios? You need to do meaning of ratios, objectives of ratio analysis, merits and demerits of ratios, types of ratios, basically liquidity, solvency, turnover, profitability, and in great depth. So what do you have to do for each ratio? For each ratio, you need to know the meaning of the ratio, its objectives, the formulae for each ratio. That is the most important. You're going to be asked formulas of all the ratios you find in your syllabus. So what do I mean by the term component details? Component details, let me take for example a ratio called current ratio. This is the easiest one to understand. Now every current ratio is equal to current assets upon current liabilities. You need to know what are current assets, be in a position to define what current assets are, what are the current liabilities, what all examples there are of current assets and current liabilities, and that is what I mean by component details. Then comes the most important reason for which you prepared your project report in accountancy, and that is implications. Your teacher must have told you, well, you need to calculate ratios for 2 years, previous year and current year. So what the hell do you do with that? Why do you do that? Well, it is simple. For when you compare the previous year with the current year, the ratio might either have remained the same, or may have increased, or may have declined. Then you need to be in a position to tell the impact of that change and its relation to the company. What do I mean by that? You have to correlate the implication of each and every ratio. You have to correlate the implication of increase, decrease of each and every ratio and what conclusions you have drawn with respect to the company's operational performance. So after you finish off with ratios, you learn the outline, the meaning, the objectives of calculating ratios, the components of each and every ratio, the formula for each and every ratio. Then you need to follow up with the cash flow statement. So what is a cash flow statement? It is a summary of inflows and outflows of cash during the financial year. And what do you need to do in a cash flow statement? What do you need to prepare for? Well, you need to be able to tell which activities will be classified as operating activities, which will be classified as investing activities, which will be classified as financing activities. And if you're preparing the cash flow statement analysis for the company that you have chosen, well, you need to simply be able to explain in, let's say, half a page paragraph each, what implications, whether cash has flowed in or whether cash has flowed out during, in case of operating activities, in case of investing activities, in case of financing activities, and the implications of the same on your company that you have chosen. For instance, if investing activities have a negative outflow of cash during the year or a net negative outflow of cash during the year, well, it does not necessarily mean it's a bad thing. Well, the company may just have purchased non-current assets for future growth and expansion. So you have to write the implication for each and every every activity presented in the cash flow statement and its impact on the company, positive, negative, or any other conclusion you may draw from there. In part 6 of the videos, I'll talk about inter-firm comparison, intra-firm comparison, comparative and common size balance sheets. This I've kept for last because it is relatively simpler than the entire content. So, over a period of 6 videos that I'll be linking, description for which I'll be providing in the links below, the company that you have chosen should be an Indian company, preferably with the year ended 31st March of this specific year that you're dealing with. A brief description of what is to follow. In part 2, I will deal with ratio analysis. Now, ratio analysis has been discussed in great depth in 3 parts, part 2, 3 and 4. Part 2, I will deal with liquidity and solvency ratios and in-depth detail of each and every ratio, like I said, along with the Viva questions. In part 3, again I'll deal with ratios, but more specifically, I'll be dealing with activity ratios. And like I said before, in-depth detail of each and every activity ratio and its implication thereof with Viva questions. In part 4, I will deal with profitability ratios. In part 5, I will deal with cash flow statement analysis. And I'll deal with what activities constitute as operating activities, investing activities, financing activities. In part 6, I'll deal with comparative and common-sized financial statements. I'll be discussing those specific points which most of the children forget to learn because they're normally not talked about. If you want to have an edge in your Viva, please do watch all our 6 parts, and please do in the end, please like, subscribe, share, comment and press the bell icon. Thank you so much and good luck.